watch music at
Yeah, welcome.
gofreshnow.com.
If we had entered the markets, we would have sell all. We would have buy. From here, we buy. From here, we buy. Price cuts above 20 moving average and price starts trending above the 0 MACD line. The histogram starts trending above the 0 MACD line. So we take a buy trade. Now we would have bought all the way down, as you can see, down to this extent. Maybe we would have closed our trade somewhere around here. We would have closed our trade here. We would have closed our trade here. So we would have made a lot of profits from that huge move. So that is it. That is it. Now I want to show you two ways you can use the MACD, because we're going to be talking about it later. Now talking about the MACD, we can take a buy trade. This is the 0 MACD line. This line you see, it's 0 MACD line. If you look at it where it shows you a 0 here, it shows you 0 here, 0. So the MACD line has 0. And also the MACD line also have the histogram. This is the histogram. This one with yellow, that is rising up and rising down. This is the histogram, and this red line you see is the signal line. This red line is a signal line. Now this is the two ways we can use MACD. We can take a buy trade when the histogram starts trending above the 0 MACD line. So this is where we could take a buy trade, and then that is it. Now we can take a buy trade again if the histogram is above the signal line. When the histogram starts rising above the signal line, we can take a buy trade. This is a very good example. As we can see, the histogram was below the 0 MACD line all this way, but at this point the histogram starts to rise above the signal line. The histogram starts to rise above the signal line, so we could take a buy trade from this point. This is a point where we could take a buy trade and then follow it all the way down to this point. So if we had respected this, we would have taken a buy trade at this point, even before it crossed the 20 moving average. So two ways you can trade MACD. If you want to sell, you wait for the MACD histogram to start ranging below the MACD signal line. At this point, this is where we would have taken a sell trade. We would have taken a sell trade here, which is at this candlestick. Yep. Now it takes another candlestick for price to cut below the 20 moving average. We are still here before it moves down to this point, and histogram starts moving below the 0 MACD line. So one way we can trade it is wait for the histogram to start ranging below the 0 MACD line, or we look for histogram when histogram starts to range below the signal line, sell. Therefore for a buy market, we wait for the MACD histogram to start ranging above the 0 MACD line, or we wait for histogram to start ranging above the signal line. So those are the two things you want to understand. Okay, so this is the basics. Now let's move on. I want you to understand that this works exactly the same way on Forex space. Okay, now I want to add another. So before we go further, I want to take another market and demonstrate if what we said was correct. So this is volatility index 10, and when price starts ranging below the 0 MACD line and price is already below the 20 moving average, we take a sell trade from here, and we would have sold to this point. So if we were to be respecting this, we would have taken a sell trade from here when it just cuts below. So we would have taken a sell trade from here, because MACD histogram has already started ranging below the signal line. So we would have taken a sell trade from here, which is here, yes, where price just cut below. You get it? Okay, but we don't want to be taking a trade when the candlestick is just cutting. We want to allow it to form a new candlestick under the 20 moving average. So we would have take the trade from here. Okay, instead of waiting for it to start forming below the 20 moving average. So that is one way would have done it. Okay, let's look for another buy markets. Okay, this is a buy market. Price caught below 20 moving average at this point and form a candlestick above the 20 moving average. Should you take trade here? First of all, price the monthly histogram has not has not crossed above the zero line, so price is still here. But what we see is that the histogram are already above the signal, the MACD signal line, so we can take a buy trade since already price has already caught above the 20 moving average. So if we have taken a buy trade from here, it's still okay. Or if you wanted to wait for this one to give you a signal, then you would have taken a buy trade here and then buy all the way to this point. So if you take it from here, you would have buy all the way to this point. So that is it. If you check other markets, you get the same thing. Get the same thing. Shit. So that is it. As you can see, price caught above the 20 moving average, and then price starts ranging upward above the zero MACD line from the MACD histogram starts raising. It changed from downward to upward, and then you see a huge move. So that is it. So you see another one here. Price caught below the 20 moving average, and then price came down. So that is it. When price cuts below the 20 moving average, MACD histogram starts trending below the zero MACD line. So you see a huge sell for us, and see what you would have made knowing that this is a 1 hour time frame. So that is it. Now let's go to the second part of the BASBMA strategy. Now we've created the foundation. This is the very foundation of the BASBMA strategy. The very foundation. This was where we started. We started trading like this, but some things happened, and we understand that there are some flops in the strategy. For instance, this was the flop we discovered. When price caught above this 20 moving average, and then MACD start trending upward, and then you take a buy trade from, let's say if it was to obey this MACD start trending above the zero line, we would have taken the buy trade from here, from around here, this candlestick or even this candlestick. But you see, it did not buy, it sold. But if you are taking it from here, you just get cash small pips. If you're on Forex, not on binary, if you're on Forex, because of spread, this won't mean anything to you. But for those on binary, the spread is very fixed. This will mean something to you. So this is one of the flop of the strategy. So how do we go about this? If you check well, you see it. That is how it is in some places. So we cannot tell you, because when you are trading, real life trading, you won't be seeing all these are blank. You're trading on a blank sheet. So what you are seeing is just the present candlestick at this time. So you would have been entering this trade with confidence that you are trading with the BASBMA strategy and take a buy trade, and then it just reverse against you. So that is it. You are trading on a blank sheet, and you won't know what will happen next. And then when you take your trade with confidence, it will just turn against you, and then you think the BASBMA strategy has flopped. That is how it is with every other strategy you may go out there to look out for. That's how it is. That's all. We did our best to ensure that we try to filter those things out and not take those trades. Okay, so this is another example. you would have entered this trade price cuts above 20 moving average, and then you would have entered this trade from here when MACD histogram starts ranging above this row MACD line. So you would have entered the trade from here, but you see you couldn't cash enough pips. Now when you are here on a live trade, this, you know, these are blank sheets, and you are here, you just move upward. You will now have the confidence that price will still go upward, and then when price starts retracing, you will now be thinking price will still go upward. It will just come down and then retrace. It came down, you think it will still pass because your entry point is somewhere around here, and then it goes down against you. So how do we avoid this? Now let's move over to the second phase of the BSBMA strategy. The second phase. Now I want to establish something. Let's look at the moving average now. The 20 moving average. I am not going to remove this 20 moving average. It's just going to be there. This 20 moving average is still going to be there. Now I want to apply the Bollinger Band. I want to apply the Bollinger Band. Okay. Now this is what I'm seeing, because I have two indicators on my screen already. So to apply another indicator, what I will do is click on this first F plus, that is to add more indicator. Take note, I'm adding it to the main windows. Do not add to Windows 2. No, just always be adding to Windows 1. Where it says you cannot add it to the chart, it will create a new Windows for it by itself. So just be clicking on the first one. Be clicking on these ones to add more indicators. Do not click on this one to add. You will just spoil the whole thing. So click on just the first one. So I'll click on this first one to add the Bollinger Band. Now this is the Bollinger Band.